most kids learn about investing through the stock market game. And every time I would go into a class, you go in and I'd be like, okay, what's in your portfolio? And they'd be like, triple leverage biotech companies, 100% Tesla. Basically, it encourages kids to take as much risk as they possibly can in a
To win the
3 month period
game.
of time. Yeah, to win the
Yeah.
game. You either win or you lose, terribly. And
Yeah.
that's how, and every time I'd have to be like, whoa, 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 guys, this is not investing. Investing
Yeah.
is, what company do you want to be the owner of in 10 years and why? Why would you want to
Yeah.
be an owner of that business?
This podcast is for advisor use only and not to be distributed to the public. The Wealth Consulting Group is an SEC registered investment advisor, and the opinions voiced and contents in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful.
Welcome to the Bull of Wall Street podcast. I'm Jim Worden, the Chief Investment Officer for the Wealth Consulting Group. We are super privileged and happy to have James Fletcher joining us. James is the founder and Chief Investment Officer for Ethos. And is it Ethos Investment Management or Ethos Capital Management?
Ethos Investment Management.
Ethos Investment. Sorry about that, James. We're welcome to the podcast, James. And so we want to learn all about you and what you're doing with Ethos, and tell us about your journey as well.
Yeah, so this is the 20th year for me doing investment management. I've been doing emerging market equities my whole career. So I was at Brigham Young University in Utah. I was actually a LDS missionary in Brazil for 2 years and came back after that experience and just fell in love with the Brazilian people and the language. And I came back to my finance program at BYU and I said, I don't really care what I do, but I would love to use my Portuguese. I love different cultures. I would love to travel internationally. And some of the advice I got at the time was, okay, one of the careers that can lead to good international travel and allows you to use your Portuguese is investment management and fund management. So I did a couple internships. One of the internships I did was a fund in Boston called Westwood Global Investments. I was hired as a Latin American analyst. And basically from day one, they started handing me Asian companies as well. And so basically now we're on 20 years now of meeting about 500 companies a year. We travel to 15 countries a year. 9 years ago, I got an offer to join APG Asset Management and launch their emerging market small mid cap fund based in Hong Kong. So we moved our 5 kids to Hong Kong, built a team, managed $1.5 billion for them, generated good investment returns, and then on the back of that success, I was able to launch Ethos Investment Management. We take a very long-term approach to investing. We call it a Warren Buffett-style approach to these inefficient growing markets like China, India, Brazil, South Africa. And so that's what we do at Ethos. We have a team of 12, 10 of which are based in country, in the countries that we invest. And we travel a lot, meet a lot of companies, and passionate about emerging markets.
That's fantastic. Well, I did not go to BYU, but I went to BYU Hawaii.
Oh,
So
great.
the story there is I actually served a mission in the Philippines, and I loved it, and I got used to the weather, like warm weather all the time. And I came home to my very, very small town in Northern California, in between Sacramento and Lake Tahoe. I came home to snow. And that kind of cured me of my desire to go to BYU Provo. But I had a neighbor friend that said, well, I'm going to BYU Hawaii. And so I said,
Mm,
sign me up. And so I went there,
good
joined
for
the Filipino
you.
club, met
Good
my
for
wife. My
you.
wife's Filipino. And so, but yeah, but this is awesome what you're doing there. And I know exactly what you're saying about being able to use the language and travel. And that's amazing. And so kind of to bridge, you and me where we're at, when I was a missionary there,
Yeah.
I loved it and went to BYU Hawaii. And then someone from BYU Hawaii asked me to do a podcast. This is a couple years ago, a
Mm.
Mentoring Monday podcast. And that was with Chris Manondo, who works with
Oh,
you.
yes.
And
Yes.
and so Chris, I never knew Chris. I never met him, but I met him virtually. But I served a mission with both of his parents in my mission. Isn't that funny?
No way,
But
Jim. That's amazing.
yeah. So and I've read some of the things that you're doing with this Young Investor Society, and
Yep.
boy, all the education that you're doing. Tell us about the Young Investor Society and BYU Pathway, because you're helping a lot of people in a lot of ways, and but it's helping you and it's helping your investment management, and you're uncovering alpha, which is what all investors want, right?
Yep. 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 Okay. Well, thank you for the question, Jim. And I had forgotten that you know Chris. That is amazing. Let me start with BYU Pathways. So what I was approached. So we launched Ethos 4.5 years ago, um, and set up as an emerging markets fund uh, based on sort of my long experience and the track record. And as I say, we travel a lot. We meet a lot of companies every year. We had our solid portfolio of businesses that we invested in. About 2 years later, after we launched Ethos, we launched it with $100 million of great institutional clients and family offices. I was approached by BYU Pathways, and BYU Pathways, for those of you who are not familiar, is like a Brigham Young University school by the Church of Jesus Christ of Latter-day Saints, but instead of being based in Utah or Hawaii, where you went, or Idaho, it's an online education primarily for international students that are looking to get an education, from their home countries. They have 80,000 students around the world. Anyways, they approached me and they said, "Hey, we hear that you do work and you invest in these countries where we're hoping to give internships to our students. Would you be willing to take a couple interns from some of the countries that you invest?" And at
Yeah.
the time, I said, "Yeah, sure. Let's take a couple from Philippines. Let's take a couple from Brazil, and we'll give them stocks to cover. We'll give them financial model templates, and we'll see how they do." And they actually had over 200 applicants in that first cohort. They
Oh,
selected
wow.
50 to be in our internship program. They put them in teams of four, and they were from Africa, Philippines, India, Brazil, Peru, Chile,
Yeah.
Mexico.
Wow.
The surprising fact was they were doing remarkable work and research for us, and like being boots on the ground and doing surveys and doing primary research, speaking to managers of stores in their local language.
Yeah.
After that, we did another internship cohort and then another internship cohort. At this point, we've had over 300 associates go through
Oh,
our
wow.
Ethos, Pathway internship program. It's been so successful that we launched a version of our fund, so a new share class of our fund. So you basically, as a client, get the same returns as you would get in the core master fund. Um,
Mm-hmm.
but this fund is set up where we dedicate 2/3 of the management fees, and we put it in a separate nonprofit P&L. And this
Mm.
P&L pays for salaries of BYU Pathway graduates from underprivileged backgrounds. And so what it does is it gives clients a chance to earn good returns on their money, like other investment manager.
Yeah.
But then also you're giving jobs to graduates through the management fees. And what that gives to us as Ethos is more boots on the ground and more insights and eventually better returns for clients. And so we started this 2 year or we started this 1 year ago, this separate share class of our Ethos
Yeah.
Pathway Fund, and it has just sort of caught fire. We've been able to hire 9 full-time associates from the $15 million that we've raised in this fund. And we sort of piloted it this first year. And at this point, we think the sweet spot will be 50 to 100 associates. So we have 5 or 6 in all of our core hubs around the world, Philippines, Africa, Sao Paulo, Mexico City. So we're building these hubs. And anyways, it's exciting. The end conclusion is that this is not charity work.
Yeah.
They are adding value to the fund. They're making our fund better. They're making our business better. And frankly, we think it's a good business decision to hire more pathway graduates and get more insights on the ground.
That's super interesting. I mean, I've been in the investment business for, gosh, I don't know, it's 20 going on 27 years.
Yeah.
And I haven't seen any network like that. So that is really great. And who knows, you may do this and then you may have copycatters like try to do it. But I feel like how you set it up to work with them, and like you say, this is a win-win. So like better
Yep.
returns.
Yep.
Right? Investors just want better returns. But if you can
Exactly.
have better returns and help people at the same time and feel good about it, that's pretty amazing.
Exactly. We think hopefully actually we inspire other funds to do something similar and to
Yeah.
hire more, on the ground, outsourced employees. But as of now, what we've heard from everyone is this is a fund that, unlike anything we've ever seen in our industry, where we're giving away 2/3 of our management fees for this nonprofit P&L. And the reality is, I think, very few funds would have the desire to manage, 50, 100, 200 employees in different time zones, train them,
Yeah.
go like we have a rigorous training program where we go through everything from just getting started in finance all the way to conducting calls with companies, detailed financial models, understanding intricacies of balance sheets and income statements. So to create what we've created, we think would be a pretty high barrier to entry.
Yeah. Well, and it feels kind of like crowdsourcing
Yeah.
and, kind of what goes on there. It makes me think of the book. I don't know if you've ever read the book Super Forecasting.
Yep. Yep.
It makes me think about the super forecasting book where they had all these forecasters, lots of them, and
Mm-hmm.
they weren't biased, they weren't the professionals, but they could actually collectively outperform the professionals. So, I mean,
Yep.
that's fascinating what you're doing there. And so then tell me about this young investor society that you have. I feel like this is just like education for high school students. And by the way, a lot of high schools aren't really doing much to educate their
Exactly.
students about finance and even basic, cash flow, budgeting, that a lot of that
Mm-hmm.
they don't cover. So tell me more about that one.
Yeah, so this was, and I guess, going back to the Pathway story, 2 years ago when we were approached by BYU Pathways, why I was crazy enough to say, I think we could train new graduates, and I think this could work, is because I had had nearly 10 years of experience with Young Investor Society. So, Young Investor Society is a pure 501c3 nonprofit. Um, we essentially aimed to create the CFA Institute for high school age kids. So a very rigorous, well-regarded, credentialed program that teaches high school age kids personal finance, budgeting, but then all the way to financial analysis, stock market investing. Our flagship program is
Yeah.
a global stock pitch competition, which is modeled after CFA's, college
It's
stock pitch competition.
wow.
And we basically do that for high school age students. How did it start? Let me just tell you the quick story for those listeners that may have high school kids. I was in California at the time. I was a portfolio manager at Kane Anderson Rudnick, and I was volunteering at high schools. I was volunteering with the stock market game. So the stock market game is run in about 1 million kids per year in high school in the United States do the stock market game. It's a 3-month simulated, stock portfolio. You try and outperform your class. And like you said, we teach investing very poorly and personal finance very poorly across the country. And most kids learn about investing through the stock market game. And every time I would go into a class, you go in and I'd be like, okay, what's in your portfolio? And they'd be like, triple leverage biotech companies, 100% Tesla. Basically, it encourages kids to take as much risk as they possibly can in a
To
three
win the
month period
game.
of time. Yeah, to win the
Yeah.
game. You either win or you lose, terribly. And
Yeah.
that's how, and every time I'd have to be like, whoa, 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 guys, this is not investing. Investing
Yeah.
is what company do you want to be the owner of in 10 years and why? Why would you want to
Yeah.
be the owner of that business? And so um, I visited a school called Roy Ball Academy. It's inner city Los Angeles, 99% Hispanic. And I went in and I remember my coworker was like, good luck talking investing to Roy Ball. And I walked in and we just had the most amazing engaged discussion. They were bright, they were smart. I got a letter from a young man named Edgar afterwards, and he said, Mr. Fletcher, you probably think this is silly, but your 45-minute visit has changed my life. And he said,
Wow.
I now want to go to college. I now have something I want to strive for. I think I have a skill in mathematics. And, after that letter, I said, we have to do something for kids like Edgar. We have to teach
Mhm.
investing the right way, and we have to show as a financial community that we want to be that bridge between, kids like Edgar and the financial community. And so I went to someone from Harvard Business School, I went to someone from Merrill Lynch, went to someone from Fidelity, and I said, let's put together, the CFA Institute for high school age kids. And we came up with lesson plans. We came up with teaching tools. We put together the first stock pitch competition that year. That year in 2014, we had 6 schools, primarily in California. Next year, we had 50 schools participate, then
Wow.
150 schools, then 300 schools. And as of today in 2025, we're in 3,400 high schools in 80 countries around the world. And it's the largest high school investment community in the world. And so we hit on a vein that, teenagers are smart. They're doing AP calculus. They can understand a financial statement and a stock analysis. And so we're training those kids through Young Investor Society.
That is so amazing, that story, because it started with Edgar, right? And maybe had Edgar not like wrote the letter, maybe it would have happened, maybe it wouldn't have happened. But I mean, now you've got 3,400 schools, and I just appreciate that so much because both my oldest daughter, or my oldest son, and my daughter, they did the same investment game too, and I tried to
Yeah.
educate them. This is not how you want
Yes.
to invest.
Yeah.
Because it
Yes.
was like I need to have the best portfolio in 3 months, and so I'm like, this is you're really rolling the dice on
Yes.
this.
Yes.
But that's amazing. And so you've had, and I think I read somewhere that J.P. Morgan and Goldman
Hmm.
Sachs and Bloomberg, all of these large investment management or investment companies, software companies are like they're involved with this. So that's
Yep.
that's pretty incredible.
Yeah, so it's run as a nonprofit organization. Like we sort of set from the beginning, like we're gonna be like the Khan Academy and make it fully free for teachers, for
Yeah.
students, for everyone. And luckily, we've had amazing corporate support, and Bloomberg is our largest sponsor. They help, financially, but they also help put on our flagship New York event every year. Goldman Sachs, J.P. Morgan, Grandeur Peak, PIMCO. It's been
Wow.
beautiful to see sort of Edgar's plea fulfilled, which is
Yeah.
adults don't really care. The financials, no one's ever come to my class before. And our thesis was if we build a bridge, there is a lot in the financial community that cares and would love to help out teenagers. And that thesis has 100% played out. Like the generosity of the Wall Street community has been really, really impressive.
Well, and I feel like what you're doing is probably not only great for the students, but the teachers probably get a lot out of it too. I'm
Yeah,
just thinking a lot of
teachers
teachers
love it.
don't know. So just, I mean, I think, and I think we're completely on the same page here that like we want the same thing to educate people as much as possible. That's one of the reasons why we have this podcast,
Yes.
educate people. And we'll talk about different types of investments, but really, at the end of the day, we want people to have a better life and to make better choices, better decisions about what are they going to do with their retirement planning, and it's frankly a little bit scary because today, there are apps that are out there that would just encourage, you can just speculate and kind of
Yep.
put everything in crypto, right? And
Yep.
so
Yep.
we're constantly trying to educate, you know, clients, but also advisors. But I would say a lot of this is the younger folks. So what you're doing, I think, is a very very important work that hopefully can counter offset some of those people that think that investing is just trading, and I'm a CMT, I'm a technician, so I get the trading side, but it is totally
Yep.
different than investing for the long term.
Yep. Well, thank you, Jim. Hey, we'd love to get you involved with Young Investor Society. We have lots of guest speakers and judges. You should, and
Yeah,
actually,
yeah, we're happy to help with that, of
yeah, and
course.
to all your listeners as well, like Young Investor Society is really supported by volunteers that help judge competitions at the state level and the national level and mentor schools. We have like an adopt a school program. So yeah, I mean, there's lots of ways to get involved.
So I probably should have asked about that one first because that it feels like that kind of dovetailed into BYU Pathway and this big network that you have. I mean, it's kind of cool to see all these things fall in place. So what do you think is next for Ethos and what you're doing there? What's kind of the next
Yeah, I
vision
mean,
or goal that you have?
you can kind of hear from my career story, which is, a real focus on investment management, a real love of Warren Buffett and emerging markets. And then on the other side, this like nonprofit education that has just
Yeah.
taken off before our eyes. And we're still scratching our heads saying, how in the world did it get so big? um, so, what is the future? I'd say for like Ethos, when we launched this Pathway Fund, it really was those two worlds, those two passions coming together. Had a really talented team at Ethos Investment Management, but I brought in someone. Her name's Patricia Ball. She was on the board of Young Investor Society and worked with me at Westwood Global Investments in Boston. And so really shared that passion of training and educating and helping. And so she oversees our Pathway Associate program, the training and the development. And so, yeah, I mean, like I said, like our goal at Ethos is great returns, and great returns come from a very unique information source and hiring these as many associates and analysts on the ground as we can. And so our goal at Ethos is to grow to grow our total assets under management to be about $500 million. And that will allow us, if we're doing 2/3 of our management fee and we're hiring across Latin America, Asia, Latin America, to be employing about 200 to 300 associates per year. And we run it as a full-time analyst program for 3 years. We pay for their CFA degree, we buy them a computer, they're our full-time analysts. And then at the end of 3 years, they either stay with us, get promoted as a team lead, or they move on to business school or JP Morgan Philippines. So the goal is in the next 10 years to get 1,000 associates through our associate program at Ethos. And kind of to your point, Jim, like the super forecasters, the more data inputs you have, the better the fund and the better returns and the better insights on the ground that you have. And so we think that will create, one of the most powerful emerging market fund franchises, because we have so much talent on the ground. Fidelity Investments or BlackRock, asset management, their total emerging market teams on the ground are about 50 to 60 analysts. So we could very shortly become the largest team on the ground across emerging markets in asset management.
Wow, that's fascinating. I mean, at some point, like we usually talk to our guests at some point about AI and using AI and the data.
Yeah.
I feel like at some point, this is a really good example of good, high quality training data, the data that a good system to train on, because you've got all this boots on the ground. There's more of it. It's there, the breadth is there, but there's also some depth to it. And then what you're doing with CFA Institute, by the way, is probably thrilled that you're doing this, because they would probably love to have more charter holders out there learning and helping investors. But I mean, who knows? Maybe the large firms are going to buy the research from you at some point. Who knows?
That is a business model we're exploring, is that we would have a large database of research that we could potentially sell. Especially, as you know, like on the sell side, the investment banks are making most of their money through high frequency trades and large cap stocks. And actually, you've seen small mid cap coverage really dwindle across US, but especially emerging markets. The coverage has really been left almost to be a desert, in small companies in Thailand or small companies in India. And so, the fund management community has need of research reports across these companies. There's 12,000 listed stocks in emerging markets above $100 million. 12,000 companies.
Wow.
And probably only about, 3,000 of those have proper sell side coverage. So
analyst coverage. Wow. Yeah, and that's a very inefficient market, right? So emerging markets is
exactly.
Emerging markets, small cap is even much more inefficient. So to the degree that you're able to uncover some of those, inefficiencies, then you can capitalize that and you can create some alpha and help the people that are doing it too.
Yeah, and I'll give you some examples. Like I think it blows people away when they sort of hear the real life examples. So, 2 years ago, we had an internship team research a company in the Philippines called Asian Terminals International. They are the second largest port in Philippines. They have a very large port outside of Manila. They are a great business. They're owned by a parent company, which has a very good reputation. But as a small cap stock in the Philippines, they had zero sell side coverage. They had very little investor communication. We sent these team of interns to go meet with the company. The company told us that we were the first investor to meet with them in 19 years, a foreign investor. the stock was trading at 6 times PE ratio compared to most ports trade at 20 to 30 times PE ratio. The company was expanding capacity, they were growing. It was a very unique, valuable asset.
Yeah.
So, we bought the stock. The stock is up 121% since we bought it, but it's still only at 9 times PE ratio. Like there's still such inefficiencies in these markets.
Yeah.
We sent a team in Kenya to do research on a company called Safaricom. Safaricom is like the largest telecom. They're the Verizon of Kenya, but they have a fintech business called M-Pesa. 91% of banking transactions in the whole country go through M-Pesa. And so our analysts on the ground in Kenya did all this proprietary work, surveys. Basically, we invested in Safaricom. Safaricom's up 100% since we bought it. And so, these are alpha opportunities that sending teams on the ground and doing the research, investing in these markets where others don't go, can generate, great returns for clients.
This is such a wonderful story to hear. I'm sure there are advisors and there may be investors out there that are thinking, well, how do I invest in this? How do I capture this? So do you have mutual funds or ETFs? Is that something that you plan on rolling out right now? It's basically just a separately managed account, or is it a hedge fund? What's the structure now?
Yeah, good question. So we launched as a hedge fund. And, the typical hedge fund LP structure in Cayman and Delaware for US and offshore investors. The good news is we're preparing a ETF launch of our Pathway Master Fund. And so, the ways to get in touch are, through our website, ethosinvest.com, and you can reach out through the inquiry form. But as you know, like current hedge fund requirements require that it's a qualified investor.
Sure.
But the good news is we're getting some significant traction now that we expect to have the ETF launched in the next 6 months. So that should make it a lot easier for more investors to get exposure. And some of these markets that we invest in, so the largest market we invest in is in India. It's about 25% of the portfolio. As you may know, India is very difficult for U.S. investors to get exposure to. It took us about 10 months to get full custodial approval by the SEBI in India. If you're a U.S. investor and you don't get registered in India, you only have exposure to about 5 ADRs that trade on the NASDAQ. So it's a very limited exposure to core India. Whereas India is the 4th largest economy in the world. It has 4,000 listed companies, and we find a tremendous amount of wonderful businesses growing at 20% plus with great management teams. And it's very difficult to get exposure to that unless you find a manager like Ethos that takes the trouble to get registered and custodied locally in India.
Well, this is super fascinating and interesting. I could probably talk to you for hours about all this. So what do you think is like this year is a good example of a year where we've had the Mag 7, and then for a period of time we had the international, during the tariff tantrum, I should say.
Yes.
And Liberation Day, and then you had this really sharp V, but you did have some capital outflows and good performance with international companies.
Yep.
Where do things lie now? Excluding U.S., what are like the best opportunities that you and your team, your network, what are you guys seeing is like most interesting for probably the next 1 to 3 years? What do you think?
Yeah, so we're pretty bullish actually on emerging markets right now and international equities. Certain markets we like more than others, and certain markets from the bottom up we find more opportunities than others. In a nutshell, when I started my career in 2004, it was the beginning of a huge decade for emerging markets outperformance. And it was sort of the lost decade for US stocks after the dot-com, bust.
Yeah.
And then the past 10 years, past 14 years have really been the opposite, right? It's
Yeah.
been strong performance of US stock market, really led by the Mag 7, and emerging markets have underperformed over that period. What has led to that underperformance in emerging markets? One is the earnings growth of emerging markets has marginally lagged the earnings growth of the Mag 7, right?
Mm.
So in that sense, it's U.S. has earned higher returns through
Sure.
better earnings growth. What has also hurt, excuse me, what has hurt that has been the US dollar has strengthened. So when emerging market earnings get translated into US dollars and the currencies devalue, that's been a significant headwind for emerging markets. And then the third factor is the valuation. So, like if you just use PE multiples as a proxy, uh, PE multiples have continued to sort of, get lofty in the US, whereas emerging markets, they've continued to derate. And at this point, you're at a 40% discount to PE valuations across like for like sectors and like for like companies, EM versus US. And so, where are we today? Emerging markets actually had higher earnings growth in 2024 and 2025 than the US. And that was the first time in 10 years. So finally, we saw sort of earnings growth, start to catch up. Two, we see the US dollar starting to weaken. I think this is very significant that you're seeing outflows out of treasuries, out of US assets into international assets. It's been positive for EM currencies. And then the third one is that valuation differential has gotten so wide that it's started to narrow. So like this year, for example, EM is up 32%, through October. US has had a good year and Mag 7's come back, but emerging markets have outperformed. I don't think it's unreasonable that that's the start of, a 3 to 5 year period where those valuations normalize. Emerging markets is delivering solid earnings growth, and currencies don't get so out of whack that the dollar is getting so strong every year. And then in terms of countries that we like, and again, we travel to 15 countries a year. We listen to 400 earnings calls, every quarter, and we're in the thick of earnings season right now. So what we like from the bottom up, we're bullish on India.
Hmm.
I think Southeast Asia is a very uniquely attractive time right now where these markets offer long-term good structural growth. And actually, valuations are very cheap right now. Countries in like Indonesia, Philippines, Thailand, Malaysia look very attractive to us. Another theme that we like a lot is I call it Mag 7 adjacent or AI adjacent technology
Okay.
leaders in Taiwan and Korea. So I think maybe the markets forget that 85% of the world's semiconductors are manufactured in Asia, right? It's
Yeah.
primarily Taiwan, Korea, China, Japan. And so every time you have Nvidia doing well and Amazon doing well and Google doing well, that means the ecosystem of leading edge technologies is also doing phenomenally well at companies like SK Hynix and Taiwan Semiconductor. And we own a lot of the small mid cap companies in Taiwan and Korea that offer phenomenal exposure to these long term, data center trends, but they're trading at 40-50% discount to what you would buy the equivalent in the US. So I think people don't realize that emerging markets is actually a hub for technology investing, and you're getting it at a much better valuation.
That's interesting. Well, and now I think about all that's going on with China, and they're trying to get
Mm-hmm.
caught up. what do you think about China? And then I know they're communist, and there's some concerns there. But is that an area you think gets better? Does it get worse? You know, what do you see for China?
Yeah, I mean, I've been investing in China for 20 years, and obviously living in Hong Kong, we were
Yeah.
going to China every month, and like we're very close to China, and I have so many friends there. We've done very well investing in China over the past 20 years, right? So I think from a big picture standpoint, it's the second largest economy in the world.
Hmm.
Technology patents created over the past 10 years. The only country that has more than the United States is China.
Hmm.
Um, they have ecosystem huge advantages in terms of technology, electric vehicles, energy storage. And so China has some very unique advantages that really across my world of emerging markets, no other country has that similar full suite of ecosystem
Sure.
of resources, technology, patents, a large economy to sell to. I do think the decoupling will continue between the West and the East.
Oh,
Um, and both countries are preparing for the decoupling. What that means, but I think it will be a long process, right? Like we said before, like 85% of the world's semiconductors are produced in China or produced in Asia, and China is a key
mhm.
supplier of natural resources, rare earths,
Yeah,
technology goods. Like it's not just going to separate today because it can't.
sure.
And I believe we won't have a war like over Taiwan or those territories in the medium term at least, because it just can't. Our economies are too interrelated and too dependent. But what that means for investing in China is that we do expect the decoupling to continue. We are wary of regulation, especially regulated industries in China.
Oh,
Long
yeah.
term, we're cautious on investing in China, even though today's valuations are still an attractive entry point.
Sure.
We find good businesses to invest in, but I'd say we're more cautious in China than a market like India, where we have full faith of 7% economic growth for the next 20 years. India
Mm.
has strong demographics, whereas China has weak demographics. So, a lot of those factors play into it. But what we can invest in, I'd say in China with a very high degree of confidence is leading edge industries which are benefiting from the insourcing trend. So if you're a
Mm.
domestic champion in China of energy storage or technology or you know specialized testing for food and pharma or yeah, semiconductor testing and manufacturing, if you're a market leader in China and you're competing against a Nike or Texas Instruments, you are going to take share over the next 5 to 10 to 20 years at the expense of your multinational competitor. And if you're the owner of that valuable technology or that valuable brand, those businesses should and continue to do very well. So, companies like Tencent, we're pretty optimistic for the long run. These domestic champions benefiting at the expense of multinationals.
Interesting. When you think about companies like BYD that are competing with Tesla, and they're selling apparently more cars than Tesla, but like I'm just curious what you think about them.
I think BYD is a remarkable company with remarkable technology. Their cars are everywhere. I was just in Thailand and Philippines. Their cars are everywhere in Southeast Asia. In Brazil, for example, they are taking shares so fast because you can get a very
Wow.
good EV for 20,000 US dollars with a
Wow.
good range, good technology. And then what BYD does on the domestic China side is remarkable energy storage, technology,
Yeah.
batteries. And so they really have the full ecosystem. Will BYD ever be allowed into the US to compete? I don't know. Probably not, right?
Yeah.
Given where relations are today. And
Sure.
so they are going to have some limitations as they try and grow globally. The other thing in China is the electric vehicle market is undergoing severe price wars right now. So
Mm.
there's so many funded new entrants by venture capital companies, like Huawei, like
Oh,
like
yeah.
Neo, like Great
Yeah.
Wall, like Geely, and they're all just cutting price, cutting price, cutting price at the
Wow.
expense of profit. So it's a tougher industry for us
Yeah.
to sort of, make strong cash flows consistently.
Yeah, I just remember reading something about BYD that they had a battery that it took like 5-10 minutes to charge.
Yeah, yeah.
Having owning an electric vehicle myself, that I mean that's a game changer for a lot of
Yes.
people that worry about range and where to charge.
Yep.
Hopefully that technology can come here to the US or someone will figure it out here.
Yep. And in China, they have, battery packs that you'll pull up to a gas station, a battery pack storage. You'll pop out your battery pack, pop in a new one, and you're off and going.
Oh, interesting.
Like in a lot of ways, when you are on the roads in Shanghai these days, you feel like you're looking ahead to the U.S. in 10 years. 70%
Oh,
of the cars are EVs. Yeah, like I
yeah.
said, they have these battery swapping stations everywhere. It's very impressive.
It used to be the opposite. I know I've got a brother that used to be in China quite a bit, and he would say they're like 10, 20 years behind the US, but it feels like
Yep.
now
Yep.
we're behind
There
with regard
there
to
are
like
definitely some
autonomous
industries
electric
that we're behind.
vehicles. Wow.
Exactly. Exactly.
Well, I think I don't have any other questions. Well, actually, I do have one other question. So you guys have got this network, really great network.
Yeah.
Would you ever consider using that network and kind of going outside of emerging markets and going into developed markets, or do you just feel that it's just maybe too efficient? There's already a lot of coverage there. What do you think?
Well, I'll just give you an interesting anecdote. Our uh, Young Investors Society. So when they do the global stock pitch competition,
Yeah.
they pitch a stock, and the top three stocks we track every year.
Interesting.
And we assume a portfolio of if you bought those three stocks in June after the competition's over, held it for 12 months, how would this perform?
Yeah.
Um, you wouldn't even believe it, Jim. The YIS portfolio has compounded at like 45% annualized returns
Oh,
over 10
wow. Wow.
years. So, our kids can pick stocks. And even in the US, there is opportunity
Yeah.
for, alpha generation. And, like
Sure.
we talked about emerging markets today, like emerging markets is a great place to invest, I
Mhm.
believe. There's a lot of inefficiencies, but that's not to downplay investing in the United States with some of the best companies in the world and the best technology
Yeah.
and the strongest moats. And these are unbelievable businesses for a reason.
Hmm.
So, I mean, that's where I stand philosophically. From the ethos perspective, if we were to launch a US fund, I would bring in a portfolio manager with a track record in the
Sure.
US. And I've actually talked to a couple, one that runs a global fund and one that runs a US fund. And they kind of say, hey, like your mission at Ethos and the team is amazing.
Yeah.
And so, anyways, it could happen in the future.
Yeah. Well, I wasn't really even thinking the US. I was thinking about Europe, or I
Hmm.
guess Canada, but mainly Europe. Do you see any opportunities there? Or not so much.
Yeah, I mean, like we at Ethos, emerging markets includes emerging Europe, so like Poland, Czech
Okay.
Republic,
Oh,
Turkey,
got it. Okay.
and Poland is actually, I didn't mention it, but Poland's one of the markets that we're most bullish in.
Interesting.
Great valuations, good business models, the stability of the European system, stable currencies, but still a lot of innovation and a growing workforce. And so, there's markets like that. And I think, I'm not an expert on UK or Canada, Japan. I've
Yeah.
heard from some of my friends is a great market for especially activist investing.
Oh,
So
yeah.
yeah, no, I think there's opportunities. I think the opportunities are similar to the general trend which I showed, which is, U.S., especially large cap growth in the U.S., has done so well
Yeah.
that it's created these valuation discrepancies that are, I think we're going to look back at it in 5 years and be like, oh yeah, duh, that was an obvious time to sort of diversify out of, some of the large cap growth stocks.
Yeah. Well, I really, really appreciate your time today, James. This has
Yeah,
been
you too,
a
Jim. I
fun
really enjoyed this.
time and good to talk to you. And yeah, if I'm ever out in Utah, and if you're
Yes.
not traveling around the world, maybe I'll stop by and say hello. I guess last thought here, are you following BYU? So like their football team, they lost the other day, but I feel like
Rub it
they
in,
still have
Jim. Rub it
pretty good.
in.
No, I like it. I
Okay.
like them. I hope that they can maybe have a rematch with Texas Tech. We'll see.
Yeah,
But
I
then their
think.
basketball team is, this is the first time they've ever been ranked, I think. Well, not
Oh,
now,
yeah.
but like
See.
last week, the first time they were both ranked in the top 10.
Yep. Yep. Yeah, no, it's an exciting time to be a BYU fan. We've gone to a couple or football games this year. It's been great. Yeah, I hope that they can win out. Go play Texas Tech. Bear Bachmeyer had a rough game against Texas
Yeah.
Tech, but I think he's got a lot of heart. I think he's a winner. He finds a way to win. So
Yeah.
yeah, go Cougars.
Go Cougars. All right. Well, thank you so much for joining us, James.
Thanks, Jim.
Here's Three's company too. Come and dance on our floor. Take a step that is new.